Open. Today is May 18, 2020, and it's 10 minutes until 10 a.m. In London when we're doing this market update. Gonna provide you guys with a quick update over the next 10 minutes. If we have time, I'm gonna as well answer a few questions. And the purpose of this market update is to inform you guys what's moving, talk a bit about the levels that people are watching, and hopefully help you guys to trade better, support you guys in your trading. So that's the purpose. Made this educational, but also informational, effectively sharing my view on the markets. But do understand that this is also I'm not going to be giving you trading recommendations what you should be doing in your personal account. Rather, I'm going to tell you what I think is happening, what I might be doing with my account. Okay? All right, good. So let's talk a bit about the headlines before we start off. Okay, Japanese GDP declined by 3.4% in the first quarter, and Japan is technically in a recession. And fourth quarter GDP declined by 4.6% annualized. Those are all annualized numbers, by the way. So Japan is officially in a recession. Remember, both Germany and Japan and many other parts of Europe have been struggling. Well, Japan and Europe is obviously different things, but in Europe in particular have been struggling with recession. So now we're seeing the full force of that because of the shutdowns. What else though? There's some good news as well, and stock markets are up. So Italian shops and bars are going to open. Obviously, social distancing rules will apply. That's good. A country where things were all shut down is now opening up again. You have as well in Spain. So Spain has a different situation where they have certain regions where there's been a lot of deaths, a lot of infections, and then you have other regions where there's less of the virus. And what's happening now, I think you have places like Valencia now that is opening up. So more opening in Spain. In Portugal, they're reopening schools for certain age groups. In Greece, they're opening archaeological sites like the Acropolis. And also in England, they're going to make a decision if Premier League teams can start to train this week. So that's really what's on the headlines for today. I just saw a notification here as well that Austria, Belgium, France, Germany, and Italy and Spain are looks like they're scrapping the bans that they had on short selling. So now you can start to short sell again. But if anything, the markets are up now. Later this week, we're going to have the PMI readings from the Euro area, UK, and US. And all those numbers are anticipated to open to push up a little bit. To give you an idea, Eurozone composite PMI is at 13.5 or something. Anticipated to go up to maybe 22. And then I think, come June, these numbers are going to be back maybe at 35, 40. Just as the economy reopens, because you go from nothing to something, that's a big change, and we'll see that in those numbers. So maybe we'll be back as we have seen in China. And I know it's a bit of interesting, but I got curious about the Spanish influenza and what happened there. And I saw a few videos of that over the weekend and probably spend more time on it, but that was a deadly disease. Like within 24 hours, sometimes people would just die, and it was very messy, very bloody. And compared with what happened back then, it's actually not that bad. Far more people died back then. And what happened was that during World War One, because of the big movements of military across the world and the use of ports and stuff, it took the whole virus was spread, and you have different waves as well. And the reason for you have different waves is because apparently it originated in places like Kansas, USA, and then with the military troops, it was sent to Europe, and then people got it in France, but at the same time it was dying out in Kansas, and then it sort of looped back and came back. And the reason why I'm talking so much about that today is that there's actually a lot of people that are comparing this with the Spanish flu, and that's where the thing is going to go. But clearly we're not really there. And what's also interesting with the Spanish flu is that it was actually killing people between 20 and 40, which are people that are working, whereas the current virus affects the older generation who are now working. And these two have big differences here in implications for the economy. So, and eventually the Spanish flu did die out. So I'm quite optimistic after watching that video so online. Because situation today is not as bad as it could have been at all. All right, guys. We're not in World War One to begin with. When in any world war. All right, let's take a look at our charts here. And it's a bit weird now because I'm looking that way because I changed the screens. But yeah, what's going on here? So you have the 107.25 level. That's support. You have resistance at 110.17, which is up here. And I think we have a situation here where you have just turning sideways. It's not going up. It's not going down. There's no reason to stress. There's no reason to do anything here. Just wait and see what happens. Let's look for breakout. Look at the GBPUSD as a good reminder. So we're trading sideways between 122.45 and 126.44. And I said, if we trade below, we're probably going to go lower. Look and behold, we did go lower. Why getting a bit nervous on Friday? Yes, it was. But we said, let's keep this for a bit longer and see what happens. And look at that. We're down and we're up with about 160 pip or so from the breakout point. Here, I will book some profits just because GBPUSD is not trading. Sorry, EURUSD is not trading. Dollar Swiss is not trading. Aussie dollar and New Zealand dollar are all trading sideways to some extent. Dollar yen is definitely trading sideways. So this is the only thing moving right now. So I will book some profits here. 50 up to 100%, maybe 75. It really depends exactly on what you think is going to happen. Ultimately, I do think we're going to go down to 118.76, but I think it's probably a good idea to book a bit of profits here. If it swings up to 121.91, then I'm going to be bearish again. I'm going to be bearish from that level up to 23.41 because we're dealing with a downtrend. Here's your dollar yen versus the USD. There's absolutely nothing happening here right now. There's absolutely no reason to do nothing here. Just continue to be waiting on the sidelines. That's what I'm doing. Because there's like nothing happening here. We can't do nothing when the market doesn't move. All right, here's where I would focus. Gold prices. We talked about this last week. We take out the high, we go upwards. In fact, we've been talking about buying at these levels for quite some time, and that's been going good. Now we are looking at a breakout. There's no harm booking a bit of profit now. If one is not in the market, you need to pull back to 1737, and then we go upwards, right? Very straightforward. Just wait for that unless you're already long. I think ultimately we're going to reach 1,800, and beyond that, we're probably going to go higher eventually. Soon it's time to sort of like low these weekly charts. There's probably someone somewhere that has figured out some interesting patterns, but the head and shoulders we talked about, the breakout from here to here, we talked about this one, and I think we are about to reach target. This is something, actually we already reached target. We talked about this in summer of last year. We talked about this in 2018, that if we take out this level, we can go up here. Look, we're here. Technical analysis does work, obviously supported by all the central banks. And I don't know, maybe we'll do something else. I don't know really exactly what's going to happen here. But I think we're going to go higher given the way things are in the world. Crude oil prices on fire. So up with 5.3% today. The June future. The June future will expire by the end of the week on the 22nd. And some brokers, some CFD brokers, are already closing out by the end of today because they don't want to be caught out in the expired last month. You know, as you saw, I think Interactive Brokers lost like 100 and what was it, 88 million first, and I think it was then turned into 100 million. And there was some poor guy because the Interactive Brokers system didn't really properly work. When in the Interactive Broker, they didn't show negative prices. So when he was trading the May contract, he thought he was buying like, I think he bought like some silly amount of oil for like 5 cents a barrel. And he thought, I'm doing a trade of a lifetime here. And he started the day, I think he started the day with, I'm laughing now, but it's like he started the day with, I think, $70,000 in his account. And then by the end of the day, I think he had lost like 9 million. Imagine that. And this is the US as well. It's not like Europe. If you're like a retail trader and you lose that money, you know, you can't lose more. If you're with an FCA broker, you can't lose more than what you have on your account, right? But here you can. Yeah. So he started with $7,000. By midnight, he received the news that he had lost 9 million, and he was owing this to Interactive Brokers. And obviously, afterwards, I think Interactive Brokers went out and did say that they're gonna make all clients whole. Effectively, you lose your 77 grand, but you don't lose your you don't have to pay us nothing. So high risks here involved, right? So that's why some brokers are closing out already today by the end of the day. Technically here we're at the high, right? So we talked about the breakout here potentially lifting this upwards. I did not think it was going to go as smoothly as it did, but it did go really smoothly. So if you were brave enough to trade the breakout, now we're at the take profit levels. So I will book profits here. And as I said before, let's just see what happens this time around again. I don't want to have a strong view here, but if we're really lucky, it would actually be really good if we can go down again to 24 and then take it higher. Because if we just go up and up and up, it's just a sign of greediness. And then what happens, it can collapse on itself and then just tumble. And that's the last thing we want to do. So I'm bullish, but let it go down a bit and hopefully can spend the rest of the month down here. And then we'll go up, because then as well we're creating an inverse head and shoulders with head, left shoulder, and where's the right shoulder, hopefully created over the next few weeks. And then take out the high, trade it back to 48, 52, whatever this target is going to be. So for now, I'm neutral. This is a take profit spot. This is support. If it goes down a bit, maybe we can buy a bit and then probably target the upside. All right, it's 10 o'clock, so in fact we need to wrap things up, but I'm going to quickly just go through the German DAX. So stock markets, as you know, they got it all worried about Jerome Powell's comments last week, right? And people got a bit depressed about that. They sold off stocks. But at the end, sort of we're trading sideways still here. Remove all the fancy stuff. You can see that this level is important, 10,141. I'll be bullish above that level. We're trading sideways. We might go a bit higher. The world is reopening. Economic indicators soon is going to turn better than expected. Gonna probably overshoot to the upside. So imagine like that. We're not declining on bad news. What happens when we get good news? Maybe we'll have an overshoot. Maybe we'll see stock market trading higher. What would I do? Well, I will still buy dips. Definitely not here unless you have some sort of scalping system that can help you to trade it to the upside. So we'll buy on dips, maybe 10,415, and stops just below. That's what I would have done. Not necessarily what you should do, but that's what I think is going to happen. S&P 500 as well. It's trading sideways between 27.09 and I think we go down to 28.04. I think people are going to be buying here again. So that's my view on the S&P 500 and the German DAX. All right, let's see if there's any quick questions here. We have Stefan. Good morning to you. Let's take some time for this. I really like the fact that you guys come and join me every morning. That's really good. Let me see if I can just. There we go. No, we don't. All right, so we have Stefan in the chat. We have Sarbajet. Good morning to you. Good morning, Stefan. We have HTM Mojo. Good morning to you as well. We did send you an email. I sent you an email. Hope the guys call you. I'm gonna send you a follow-up email later today. Get Maurizio as well. Good morning to you. And we have Stefan. Why is the US stock market at the same level as 1 year ago when profit forecasts were down by 30 to 40% from then? It was either wrong now or now. Something is amiss. Well, something that's happened now is that they pushed so much money into the system, right? They pushed so much money into the system. And I think that is something that is influencing stock market valuations. Like it's a huge amount of money. We're talking about, say, 10% of GDP in some countries, and sometimes even more. So that is something that is just driving prices upwards. And I was talking with a friend of mine. He works for Volvo Trucks, and they produce trucks. Now I know it's just one anecdotal thing. It's not like a biggie. But he told me that before the crisis, he was going crazy. In fact, he had two jobs. He was working for Volvo Trucks during the day, and then Volvo Cars at night. So people don't go and buy cars, and they don't go and buy big heavy lorries and trucks unless the economy is booming. So he said it was like crazy back then. Apparently, like in 3 months, he made what he made under a whole year. Of course, he was working double shifts, which you're not even supposed to do. So things were booming. And even now, he told me that as soon as China opened up, they get like a surge in demand from places like China. So remember, the economy was doing quite good before, especially, they did all these tax cuts in the US, and that was supporting things. Of course, trade wars and stuff like that was not really helping. But now you have all this stimulus, and this is helping. Now there's obviously issues, with debt and stuff like that, but that could be something. And some of these indicators that people use to predict where the markets should be, they're naturally flawed. Like there's a lot of little criticism within the actual community itself. How much is the PE worth really? Like, is it worth? Well, it's worth maybe to just look at relative valuations or earning forecasts. How important is that? I think there's less criticism there than it is within other places. So maybe it's a flawed system to begin with. There are other issues, of course, as well. You have the stock market valuation versus GDP, which is at very, very elevated levels. But the trends, they do die slowly. They don't die just very quickly. So maybe that can explain. Hey, Kwang, I hope you're doing good. Oh yeah, very lucky for that guy that covered that loss. As far as I understand. Okay, good. All right, we're gonna wrap things up. Unfortunately, I need to go. It's like 10:05, and I have a meeting at 10 o'clock. Guys, I wanna really appreciate you guys for joining me this morning. And tomorrow we'll start a little bit earlier, and we'll try to answer some more questions. Have a great day, guys. Happy trading. Be careful out there, and I'll see you guys on Tuesday morning. Thank you, and bye bye.